All right, opening range gaps. Let's do it. Okay, so to figure out your opening range gap, you want to be on the regular trading hours chart here. So you can do that by just coming down here, switching from electronic to regular, and you'll see these gaps. So the regular trading hours is basically from 9:30 open, all the way down to around 4:14, where the New York session fully closes. You can use this chart to find your first presented fair value gap of the day, much easier than on the electronic trading hours. Just do something like this. Boom, first fair value gap, first presented fair value gap of the day. Pretty easy. But for this, we're going to be looking at the opening range gap. Now, we could do this a couple ways. You can either draw them or you can copy yourself an indicator right here. For in this case, I will be drawing them just so, um, yeah, type shit. Um, let's get right into it. So let's find Monday of this week, which is here. Okay, here, right? So what we're gonna do is we're gonna draw it from the open of the 9:30 candle here to the close of the other nine of the 4:14 candle here. Oops, the close is up here. Close there and then the open. I'm gonna crash out, bro. Hold on. Okay, the open here to the close here, and this is gonna be your opening range gap. Now the opening range gap, the Monday opening range gap is the most important opening gap of the day. But ideally you want to do a 3-day look back, meaning you want to have at least 3 of these on your chart. It is gonna look really fucking ugly, but you guys are just gonna have to deal with it. Okay, so I'm gonna draw this out all the way until the end of the day, and so we can know what we're going on here. So this open range gap is basically your yesterday's settlement price of the New York session to the um New York open candle here at 9:30. This is the gap that's in between here, right? In order to find the gap fill, right? This is your true gap because this is what is lacking the delivery here. So something you can do here is, even though it's not your true gap, you can also mark out this portion of it and look for this portion to get filled. And what you can see inside of this portion of the unfilled portion here, which would include the wicks, is that you'll see price react to the consequent encroachment levels and every single like order level there, right? Let's take this for example here. I'm just gonna get rid of this for now. This is the gap that we haven't filled. This is the part of the gap that isn't filled here, right? So come market open, we come into the range of this gap and we fail to leave at the bottom of this gap here. So what does this tell you here? Since we fail to close below this part of the gap here, we can expect a run higher, especially after reacting out of the first fair value gap of the session of the week. We proceed to run higher. Price comes right back down. You can see we're finding support here. Comes back down, fails to close below the consequent encroachment of the gap here. You can see that it does close a little bit here, but if you watch ICT's videos, he does say this is permissible because it's so little, so it doesn't matter. And also it is also permissible because it is a volume imbalance type of thing here. So this is all permissible. Coming back up, price finally leaves here and then ends up leaving. I'm gonna draw it out back to the full fuck off. I'm gonna draw it out back to the full open range gap here so we can have the reference point for the rest of the day. So price ends up trading above here and taking out this liquidity here before coming back down into the range, now offering its sell side delivery down into here. Price ends up consolidating around this level right here before breaking lower, before coming back up. Once we came back above here, we can see price held this busy here, failed to close below the low of this open range gap here. So we know that price is most likely going to remain bullish up until here. Price comes up, which starts to reject consequent encroachment, comes back down, and then kind of just consolidates off into here until basically market close. And that's usually what's going to happen on your Mondays. But this Monday one is going to be super duper important. So yeah, let's draw out the Tuesday one here. Tuesday close price to the Tuesday opening price here. This is your Tuesday RTH gap here, or your opening range gap. We'll see what happens here on Tuesday with our opening range gap. And keep in mind, Monday, we're gonna keep the Monday one, but we're just gonna keep I'm just gonna keep the consequent encroachment of it onto here. just for simplicity's sake. So everything's kind of simple because you don't really, I mean, you should technically leave all of them on here, but just for simplicity's sake, we're just going to leave that one and it's going to be marked out like this here. Make it a little thicker so it's easy to see. And this is the Monday consequent encroachment one here. So coming into Tuesday here, right, we can see right off market open, you come down here and you immediately shoot up into the consequent encroachment of the opening range gap. So what ICT says is that for the first 30 minutes of market open, which is your opening range kind of time range here, is that within this time, price should gravitate towards the opening range gap, the consequent encroachment of it. So when we open lower like this is called a discount org, and when we open above, it's going to be called a premium org, premium opening range gap, and that basically just tells you, yeah, that it's either a premium or a discount. So what price comes up and does here is we come up into the consequent encroachment of this open range gap here. We come down back into the first presented fair value gap, which is located right here. And what can we see here? Little algorithmic signature. We can see that we failed to close below the first quartile of here while reacting off of a PD array, which would be this not first presented, would be down here. So if you guys want to use the 2024 model, first presented fair value gap here was used to bring us higher. First presented fair value gap here was used, right, to bring us up to mid gap here. So this is a trade. This is a trade entry right here. Boom, up to mid gap, you're done, right? Now we can see we failed to close below this portion right here. So what does that mean? We're inside of this BIST. We can expect higher prices. Price runs up here, comes into here, right? What did we not do? So what did we do here? We managed to close below the 75 level, even though we had this BIST here. Since we managed to close below here, we can anticipate that we're probably not going to come up to here as of yet. Price ends up consolidating, comes back down, consolidates around the equilibrium level or the consequent encroachment level of here, consequent encroachment of Monday here, kind of just consolidates off and ends up selling off down into this low here before starting its return back up, finally filling the opening range gap here. Do we have any questions about the opening range gap so far? Okay, cool. So I'm going to drag out this Monday C.E so we can see this a little further off into Wednesday. Okay, and we're just going to get rid of the Tuesday one. I'm only just going to keep the Monday one on just so we have a little bit of just so it's a little bit cleaner for us here. So now we know how price used the opening range gap here on Monday and Tuesday. So now let's see how it's going to use it on Wednesday here. And we're going to see a couple things that happen here on Wednesday that's going to tell us why we decided to run very quickly. And it's also present on Friday. So 414, the close of the 414 candle is right here. Since the down close candle, we opened up here and we closed down here, right? So what does that mean? That means the first one is going to be here. Where is the second one going to be located? It's going to be located on the opening here. So since this is a bullish candle, the close is up here. The open should be down here. And this is now our new our open range gap for Wednesday. I'm going to draw this out all the way to the end here again. End of Wednesday, coming on to Thursday. So what happens here is that in the first 30 minutes, we fail to reach that consequent encroachment of that open range gap. So that tells you that most likely we are probably going to be super bearish on the day and super strong bearish. When you see us fail to close above or even reach the consequent encroachment of this here, and when you see how we didn't even get to the consequent encroachment of the Monday open range gap, right? That means we're going to be heavy on the downside and price is most likely going to start spooling lower. Right here in the macro, price starts spooling lower and continues to spool lower for the rest of the day. Right? So what I'm gonna mark out here is I'm gonna keep this here, and I'm gonna keep the unfilled portion of it here, which is from here, and I'm gonna draw that out until Friday, and this is where we're gonna see stuff happen with it on Friday here. So I'm gonna leave that there for now, but let's come here into Thursday, and we're gonna look at Thursday's open range gap here now. So the close of Thursday, it's open range, close of Wednesday. It's the open of Thursday here. And what do we see instantly in Thursday come through? We see the consequent encroachment of the open range gap filled instantly. Now, What does Thursday tell us here? What does Thursday tell us here? Right? Wednesday we had a big expansion day, right? Really big expansion day. So what can we expect Thursday to do? We can expect Thursday to stay pretty much within its open range gap, depending on how big it is, or we kind of just consolidate through. So coming to the AM session, what is our bias for the first 30 minutes? Well, it should be trade down to the consequent encroachment of the open range gap here, which is what we did. Now, more algorithmic price signatures we see here. We see failure to close above the top or the high of the open range gap. So this should immediately start to tell you that price should gravitate down lower here. And remember here, guys, that this is the, even though that this is the whole open range gap, this is the unfilled portion of it down here. Okay, I'm just going to point that out here, even though we didn't quite fill it there. This is the unfilled portion of it. So remember, in order to fill it, we don't have to come down to this low. We just have to come out to this unfilled portion here. What do we see price do here? We failed to close above the opening gap high here. So what did we do? We ended up coming down lower, coming down to this quartile, ended up projecting around this lower quartile here before making our way up, right? We're finding support on these quarterly levels. Make sure to always mark out your quarterly levels here. And yeah, do we have any more questions about this? And you can kind of see how much we were struggling in the AM session here to kind of get through this right here. Come lunch open right here, right? The second this lunch macro started at 11:30, if you guys do know, if the AM session tends to consolidate, your lunch macro is technically most likely going to take over and do the most of the run here. So from here to here, we pretty much consolidated all day. Second 11:30 comes through. This is your lunch session, lunch macro start. You can see price start to spool and take out the liquidity. Do we have any questions about the opening gap so far and what we kind of see here? Yeah, I'm using this parallel channel right here. So it's this tool right here, right? And basically what it's gonna look like is it's gonna look like this when you first use it. I'm just gonna double click on it, click on style, and you'll have all these different things to do. You can extend it, add a background and whatnot. So you can do all that. That's just what I'm using to mark it. Again, you can use an indicator to mark it like this. I find it cleaner for me to just mark it out with this. Cool. All right, let's move on to the next portion of it. Remember, if the open range gap is not completely filled here, you just want to mark it out. Mark this out like right here, because since it's not totally filled here, well, technically it's not totally filled down to here, so it'd be marked out like this. But it's so small and minuscule that I'm not even gonna give a fuck about it. Right. So we are staying below consequent encroachment of this Monday here. So let's see where we open up on Tuesday here. So Wednesday here, you see how we failed to fill this open range gap here, like I said. So you want to keep that drawn out since it's not filled. Remember the unfilled, even though the open range gap high was here, the unfilled portion was up onto this wick. So this is where you want to start marking out your open range gap, right? Where did we open? Right on 9:30 open on Friday, right on consequent encroachment of yesterday's. Right? So now what can we do here on Friday here? Since all of this is now filled, we can now mark it down to just right here. What we're now going to do is I'm just going to move this all the way through to the end of Friday here. And I'm going to change the background color of this just to make it a little bit, I'm going to turn it to black here. Okay, just so, yeah, I'm going to turn it to black right here. I'm going to make the opacity really low here, just so it's not in the way. And I'm going to draw Friday's open range gap here now. So we have Friday here. What is it? We have the close of Thursday here. Draw that out. Fuck, sorry, wrong tool. Draw that out. Remember, if you guys have any questions, feel free to ask right now or whenever. To the open of this right here. Boom. And we have it to the open of here. So draw this out as the opening range gap here. And boom. So I'm just going to get rid of the high of this open range gap here on Thursday just because it's a little kind of in the way here. So I'm just going to get rid of that, make it super thin. Oh, sorry, it's the wrong one. On Thursday, I mean on Wednesday here. Just gonna make it a little less, make it a little less visible there. So there we go. And then, yeah, cool. Oh shit, that was the wrong one. All right, whatever, fuck off. I'm just gonna leave it then. It doesn't want to work with me. Anyways, come 9:30 open, what did we immediately do off 9:30 open? We immediately ran away and failed to even come into the opening range gap here. I'm gonna make this, yeah, we failed to come into the open range gap here. So what does that tell us? That we are heavy on the, okay, you know what? I'm just gonna get rid of this for now. Hold on. I'm gonna come into 2-minute time frame real quick. Interval and above. Okay, so we come back down to the 1-minute time frame. It's not there for now, right? Remember how we carried over the Monday consequent encroachment of the gap here, right? Just keep this in mind. How we referenced it here on Tuesday, and we're gonna reference it here again on Friday. So since we failed to even dig into this here, and I would say even in the first 10 minutes, we failed to dig into it here. I'm going to say once this happens, we fail to even come into it, you're going to be heavy on the upside. Price really wants to go to seek some kind of liquidity here. What liquidity does it end up seeking? It ends up seeking these highs here. And look how quickly we do that. We do that pretty much instantly, giving one IOFED here, two IOFEDs, right? Two institutional order flow entry drills. So what does that tell you? That tells you we are heavy and we are fast at trying to go up there, right? And that's all because we ran away from the open range gap here, and that's what you can get out of this open range gap. What does price end up doing? After we make a large expansion here, what does price have to do afterwards? Price has to consolidate afterwards before deciding what it's going to do next. So price ends up consolidating here into the PM session. PM session starts its descent down here. What is PM session doing here? PM session comes down, trades right to the consequent encroachment of this Monday, right? Of the Monday opening range gap here, right? Draw this out a little bit more. Monday opening range gap here, consequent encroachment, that's exact lower reject. And we start to come back up and end up coming back down into here, right? So what should you guys do for the upcoming next week here? You guys should, what is the unfilled portion of this Friday gap here? Take it down to this low, take it up down to this high here, right? And this is now your unfilled portion of it, and this is what you're going to be using and referencing for next week. Of course, you guys can leave it totally like this. That's not a big deal. This is totally fine. I personally just do it like this, and you can use this as a reference point, and make sure you guys always have that Monday consequent encroachment level there. It's going to be super important here. And what this is supposed to do here, this Monday consequent encroachment level, is basically supposed to act kind of as your equilibrium for the week. It's going to act as, what are you in a premium here, or are you in a discount here? So we wanted to kind of draw our range low from up here to down here. Right, you'll see that it is pretty close to being the equilibrium level of the range here, right, from Monday to Friday here. Slight difference here, but this is generally going to be what's going to decide your premium and discount for the range. This alongside of that midnight open on Sunday for your true week, that is what's going to decide your premium discount, in my opinion. Now, let's come back into the 2-minute chart here. And we're going to take a look at this one right here, the unfilled gap part on Wednesday here. So let's take a look at that. Right here, integrals here. Perfect. Let's come down into the 1-minute chart here. So what did we see happen here on the 1-minute chart here? Right, we know that this portion was filled here by this 9:30 open, so we could draw it down a little bit. What does price come here and do here? Price ends up coming down, and where did the body stay above here? They stay above the low of this unfilled portion of it. And what did we do here on Friday? We filled the portion of this open range gap. So what did we do this entire week when it comes to the open range gap? We made this one around our equilibrium level, right? Anytime we were below here, we were in a discount for the week. Anytime we were above here, we were in a premium for the week, right? Same thing would be true when we have our midnight open that's on Sunday, and we'll draw that out for the week as well. Right? What did Friday have to do here at the end of the day to make sure that almost most conditions were fulfilled? Most gaps were fulfilled for the week. Every single open range gap here was filled from the top to the bottom here, besides on Friday. So Friday had to come down here. Besides this Tuesday to Wednesday one. So Friday had to come down, fill it out, and now this gap is completely filled, meaning we have filled every single gap in the week besides the Friday one, and that is permissible. So do we have any questions about this at all now? About the open range gap, how to use it, what running away from it means, what trading within the range of it means. Do we have any questions about it? Again, and you can once you guys are done here, you guys can get rid of the consequent encroachment here for the Monday one. and you will use the next consequent encroachment Monday 1 for the last week. Okay, if we have no more questions here, then I'm going to wrap it up here. And yeah, I mean, and we'll go over something, I guess, real quick if we want to here. If we do look here at last week's Friday, Thursday to Friday, this is your Friday opening range gap. Let's come over here to the close of yesterday. Oops. The close here to the open here, right? You see how we have failed to fill the portion of it here, right? So let's draw it to the unfilled portion here, which is from here to here. This is now the unfilled portion of it. What did we see Monday come and do here? Monday comes and fills this remaining unfilled portion of it here. Right? So this is an unfilled gap. What did Monday have to do? Monday had to come and fill the unfilled portion of it on Friday, which is once again the Friday gap being unfilled is permissible. So what can we expect coming into next week with the remaining part of this gap here on Friday? We can expect that Monday will come and fill this gap. Does Monday have to come and fill this gap? Absolutely not. Does it probably have to come and fill this gap sometime within next week? I would say so 100%. Price most of the times will not come and leave a gap like this, but again, being so close to elections, I genuinely do not know what's going to happen. But this can be a service. This could be used as your, I guess, as a draw on liquidity here on Monday. Since you know Monday is going to be kind of like consolidation area, you can use it as your draw on Monday, right? And even if we wanted to draw it down to this low here, you can see this is kind of the part where we rejected a little bit here after taking this out. Right? And if you wanted to draw kind of your whole way through here, you can see exactly where we started to consolidate here and exactly where we decided to open up again here, right at the consequent encroachment level, like we saw on Wednesday again, on the unfilled portion of it, right on that consequent encroachment level right there, same opening. And we ended up running up and then coming back down into this part here. All right, any questions here? If we don't have any questions here, then I'm gonna wrap up this open range gap video.